positive. Remember the run? Oil prices went from negative to positive. So obviously with oil prices going from negative to positive, we obviously understand that that's simply a massive buy trade, right? But what it teaches us is their wage bill, by the way, they've got several traders that earn well in excess of several $1 million. Several $1 million, well in excess of several $1 million a year. And they managed to lose 50%. Several traders, well in excess of several $1 million a year. Analysts, top executives. And they still lost 50%. So when you think about that, it makes your performance seem a little bit more credible, doesn't it? Seems a little bit more credible when you're thinking about the losses that you're seeing. Now, the challenge they've got, of course, is that they didn't do this classroom. You're saying, okay, fair enough, great, good one. But they didn't do this classroom. And therefore, they were holding on to a position that was no longer reasonable to hold on to. Now, take a look at it for yourself. Now, this is a weekly chart on oil, right? You tell me if you think there was an opportunity to change your mind. You tell me if you were on Anderland's trading board, whether you think there was an opportunity to change your mind. First of all, let's take a look at the dollar. Now, obviously, we're focused on this high print because that's where they're long trying to get $140 a barrel. So let's think about whether there was an opportunity for them to say, well, maybe that's not going to happen. Let's take a look at the dollar to see whether oil was getting expensive up here. Was oil starting to get really expensive? This is the euro dollar at 1 over Dixie. Was oil starting to get really expensive on a macro chart basis? Now, that's okay. That's fair enough. We know what you're going to say. Yeah, but that weakness started to show really strongly here. So, I mean, they were basically needing to start short selling at $86. Well, it rallied to $120. I mean, that's a $40 upside that you've missed out on simply based on the dollar. But remember, the dollar's the weakest storyline that we've got. The dollar's the weakest storyline. So that doesn't stop me from being long. But it certainly starts giving me a little bit more consideration about top edges possibly brewing. So we move the dollar out the way for a second. Let's take a look at the linkers and see if the linkers had a view on this oil. Did the linkers have a view on the top edge oil starting to appear? Some of the best oil traders on the planet are the linker guys, right? So when we know that the linker guys are heavy short oil, should our oil trader guys start showing up here? Should these Anderland guys start saying to themselves, I don't think we're going to get $140 anymore. I think we should start short selling this at 120. Would you not have wanted to short sell that against the linkers? Would you not want to short sell it against the linkers? Well, I'd rather short sell it against the linkers. Absolutely, right? A massive consideration. Again, some people might say, and rightly so, yeah, but that would have meant you would have probably been looking at this retest high up here for a possible short. Yeah, on the short term. I mean, I don't think that's particularly bearish. I just don't think it's that bullish anymore, right? I don't think that storyline there is bearish at all. I think that storyline is still quite bullish, but that's made lower lows and lower highs. That's bearish. That's a bearish storyline, right? So now we can take off the linkers and we can start asking about the supply-demand dynamics. The macro supply-demand dynamics. Let's see what happened. Now, what are we looking for in terms of this narrative? Let's get rid of the price for a second. Oh, it's still got the RGLs, isn't it? Let's take a look at the price for a second. What are we looking for? We're looking for that black line, aren't we? We're looking for the black line against the blue line and against the orange line, yes or no? Does anybody see the actual trade where the trade took place? Can anybody spot it? In other words, if you're sitting on that trade desk with Anderlund's top executives that week, would you not be saying to them, look, guys, I think we should take our billions, and I think we should get rid of all our long oil positions, and I think we should get net short positions at that stage there? You've just saved Anderlund potentially billions of dollars, haven't you? That's a fair commission check, is it not? That's a fair commission check for anybody. Just as well we do classes for $97 so that these executives can actually afford to come into the room and have a look. Know what I mean? Save them billions for one only payment, Michelle, at $97. Crazy stuff, isn't it? So what happened to that short sale? Turned out it was the top tick in oil prices, wasn't it? Turned out it was the top tick in oil prices that week. You sold the top tick in oil. You literally sold the top tick in oil prices off the 120s. And you managed to steer a trade that made 50 points, $50. $50 a barrel, guys. $50,000 per contract. $50,000 per contract short. Now, I know that's a long-term trade and there's rolls and all sorts of things kick in and various other things that happen, but $120 over the course of 21st of June 22 to June 23, 1 year, $50,000. And obviously, when we think about that dollar narrative in the background, and we start considering how the dollar's now doing, can you see when we're starting to think about the possibility of low edges coming back in? Yeah, just like this one here. We're not selling this because the linker was telling us that this was very bullish, right? But as we start to see this storyline starting to unfold, we're starting to think to ourselves, okay, let's see if any buyers start showing up. And we started to see some buyers appearing here, didn't we? We started to see some buyers appearing here, didn't we? On a weekly chart basis. So now we've seen the dollar starting to improve. The euro dollar starting to make oil cheap for the big industrials. What are we going to start looking for in here? We're going to start looking to see that the inflation boys are going to start coming back on the bid, right? So we can zoom into the chart again and we can start looking for that storyline appearing. Because we need the dollar to be in our favor before we do any business. That's one of my requirements. It's not the most important requirement, but it's one of my requirements. So I'm only going to start looking for buy opportunities during this type of phase. Let's see if any show up as we zoom into the chart again. Let's take a look at the linkers and see what these guys had as far as information for us. Let's take a look at the linker guys and see if they were interested in this bit of business. Did the linker guys show up at the bottom edge, yes or no? The linker guys started to show up on these dips, didn't they? So in other words, when we started to see that bid coming in, the linker guy was all over this. We started to recognize that the linkers were starting to bid back into the oil. We started to recognize these possible dips as real money opportunities to buy into, didn't we? Now, that doesn't mean these are buy trades. It doesn't mean we're buying this oil. We're now looking at this as a very real opportunity to buy oil. There's plenty of other individual candles that may have been a buy trade for a week. Remember, this is a weekly chart. This is a weekly, remember, right? So this is a week's worth of buying that we're recognizing. So let's take a look from the linkers to the supply and demand and see if we find that same black line, blue line, orange line combination. Let's see if any of them show up as an actual trigger. Orange line, red line, blue line, black line. Do any of them show up as an actual buy trigger? No, none of them. On a weekly chart basis, none of them show up as a buy trigger. In fact, on the contrary, I think we could all agree that it seems actually more bearish than bullish still on upticks. If it seems more bearish than bullish on upticks, but the linkers are bullish and the dollar's bullish, but the supply is still in the market, do you see why the oil price is just rotating? You see why the price just rotates? Because there's reasons for people to buy the low price, but there's still reasons for people to sell the high price. There was actually 1 week where it was very clear about the short sale, and we could all agree it was probably that week there, yeah? You can see the red line was actually flattening out at that stage there. There was another week somewhere else. Where was it? Oh, it was here, right? So there's another week there that there was a probable short sale again coming in there. Do you see that one? Black up, orange down, red down. So there was several weeks individually. See how the black line made higher highs and the red line on a macro chart was diverging against that. So that could have been a week that you were still short selling this for that week. So we can start to recognize this. There was another week where there was a weekly short coming in again here, wasn't there? On a weekly short basis, there was another short sale there. Agree with that one? Sure. So in other words, there's reasons for people to buy oil and dips just now, isn't there? There's reasons for traders to be long oil at the low prices, but there's also reasons for traders to be short oil at high prices. And if we look at oil in those areas, you'll see that those short sales were generally all grouped around, initially at least, all grouped around $80 per barrel. So when we look at that $80 a barrel level, we can recognize that 3 of the 4 shorts were all around about that $80 break, weren't they? $80 break, sell side, $80 break, sell side, $80 break, sell side. This one was a little bit more aggressive because there's a little bit more aggressive supply coming in. We can see that macro supply coming in this uptick. And that macro supply stayed in place all the way through those high prices of $75 approximately. Do you remember a couple of weeks ago that we shorted the big 73? Do you remember that? We went heavy short at 73. Do you remember we did a lot of classes about it? We did a lot of chat about it. We did a lot of conversations about it. Well, that 73's traded 68 today. I mean, it was only $5,000, but it was still $5,000. You can almost guarantee that these guys here would kill you for that $5,000 shout out, wouldn't they? They'd be jumping over themselves to get that $1,000 trade. Maybe Kim should approach Andorand and say, why don't you send your traders in and we'll teach you how to trade oil. We'll teach you how to trade oil a little bit more accurately and a little bit more aggressively. And we'll just take 5% of your profits. We won't bother charging an upfront fee. We won't charge them $97. We'll give up the $97 for their scalping class. And we'll charge them purely based on profit. If they make $1 billion, we'll make more than $97. Good deal. We can't do any worse than 50% loss. We can't do any worse than that 50% loss, can we? I mean, it's not very good. But look at the trade ideas. Look at the trade as it developed into this as a storyline. You can see the supply is still telling us to be short at the moment on a macro swing basis, isn't it? Macro swing basis. The trade is still working on that short sell, isn't it? Because even this candle, you can see the supply-demand dynamics still diverging on that up candle there, wasn't it? Suggesting still working the short sell. Well, we worked the short sell, remember? We worked that several weeks of predominantly short selling. But the point I'm trying to make here is severalfold. Number one, do you look at your weekly charts? Maybe not. But maybe you should. At the end of every week, maybe you should take a quick look at your weekly charts to see where you're at on those macro grounds, macro areas, macro thoughts. Perhaps the weekly charts would give you some ideas on these bigger narratives, especially at the weekend, because that gives you an idea of where the weekly high and the weekly low were coming into Monday. So it makes sense to know where that is, of course. Secondly, it gives you an idea to cast your eye across some of the macro value storylines. We know that the big commercials operate on these types of time frames. Everybody thinking that the commercial was a seller inside of a 10-tick bracket, simply wondering why the price went higher or lower, simply just, what the hell is wrong with you? It's not happening, right? That's not how it works. So you've got to be better than that. So perhaps a little look at the weeklies would help you with that storyline. And obviously, once you've finished with the weeklies, you can always go down into the dailies and try and figure this out. I think we actually had a macro short, did we not, on a weekly? I think we had a macro short on the weeklies. Oh, there it is there. So there's, see how we get the macro short coming in? That was our macro short trade on the weeklies. $82.70, do you see that? See how it goes red at that stage? That's our macro short sell. $82.70 and it's traded $66.90. It wasn't that long ago, it was in April. We got that macro short sell. Pretty good? Sure. Pretty good little short sell, wasn't it? Great trade. Amazing, amazing trade outcome. And so we move into the dailies. And we start thinking about those sell trades on a daily chart. Does anybody see daily charts that are sellable? Does anybody see any particular trades that are very sellable on the daily chart? Could we agree that that's probably really sellable? Really sellable? What do you think? What was my last macro trade on oil? What was my last macro trade on oil? Macro trade. We made a big play of it in the last 2 days. It was a sell-off 70, was it not? It was a sell-off 70. Is that not what that trade is there for the last 2 days? Is that not our last macro short? Would Andorans not love to know that knowledge, that information? Would they not love to know that with their multi-million-dollar traders and their multi-million-dollar quants? Would they not love to have that trade on their books instead of a 50% loss, a 51% loss on their books? Would they not rather get involved in some of these brilliant trade swings? Well, if you agree that these are sensational trades, they've got to be your trades, right? They've got to be your trades. You've got to have that view of the marketplace. And this idea that commercials always win, or the big hedge funds always win, this is one of the reasons I wanted to show you that headline. Because a lot of you guys do beat yourself up about not making a profit. These guys get paid millions, tens of millions of dollars in salaries to return a 50% loss. Millions of dollars in salaries to return a 50% loss for their hedge fund. So don't beat yourself up about getting a losing trade. Recognize it's part and parcel of a business. But obviously the idea is that we can also do a lot better than these guys, because these guys are just way off the numbers here. They've married a position, haven't they? So even the biggest hedge funds can marry a position. They married that long position and they refused, because they're all on mega salaries, they refused to change their mind. They refused to be pushed off the deal. They refused to acknowledge that they got it wrong. And that's what costs them the money. And guess what, guys? That's what costs you the money as well. That's what costs you the money as well, isn't it? Because when you marry a position and you refuse to accept that you're wrong on a position, and then you double down on it and you think it's going to work for me, and then you double down again, and all of a sudden you're now at 20% exposure and you can't take it anymore. Most of the time, because you've martingaled, you'll get away with it. It just takes once that you're going to get wiped out, doesn't it? Just takes once that you're going to get wiped out as you build a position that you shouldn't be building because you got your trade wrong. Your first loss is your best loss. Is this trades saying that I got literally on the very first day of turning up on the NatWest trade floor. The very first day in the NatWest trade floor. Your first loss is your best loss. Take your losses early and let your winners run. That was all I was told. Take your losses early. If you think you're wrong, you're wrong. Take the deal off until you believe you're right again, and then start coming back onto the trade. Take your losses fast. Try not to lose to take you out the game. Stay in the game long enough to make sure you start catching the winning swings. Short, sharp, quick losses, long swing profits. 95% of retail traders do it the other way round. 95% of retail traders' trades will look like this. Trade comes down, value is going up, trade comes down, they buy it. Trade goes up a little bit. They put their stops at break even, or worse, they don't put any stops in at all. And the price goes down and they say, right, I love this trade even more, I'm buying it again. What, are you some sort of commercial? Are you Goldman Sachs all of a sudden? And the price rallies and you go, ah, good. And then the price drops back down and you go, damn it! I'm going to phone up JP Morgan as well. I'm now JP Morgan and Goldman Sachs. And all of a sudden the price starts to move in, and all of a sudden you're long here, you're long here, and you're long here. Your average price is here. You're now in profit by one tick. The price tips down. You take your trade off for a scratch because you're now in profit, and you say, whew, got away with that one. And then the trade does that. Or, so that was a scratch trade. Or worse than that, you've got a hard stop and you say, I can't take it anymore because if it breaks that, I'm down 20%. I'm down 20% if it breaks that stop. It will break that stop. So the trades you take are either +1 on this trade here, +1% or a scratch or whatever, and this one will be maybe -20. And that's your trade day. That's your entire trade. It's made up of +1s and -20s, +1s and -20s, +1s and -20s. You can't grow an account like that, can you? It's preposterous. So when you look at the idea of the storyline, you can recognize how a commercial trades. That's not how a retail trades. That's not how a retail should trade. Because it's stacked, the odds are massively stacked against you, aren't it? Your odds are massively stacked against you. So we can start to spot these elements, can't we? We can start to spot the storylines. Now, obviously, the idea here is you shouldn't have been catching a falling knife in the first place here. If you were going to trade this, of course, after that little dip, the trade would have been perhaps a BSG squeeze at that stage. Perhaps a BSG squeeze there after the failed auction here, and then the bid perhaps coming in there. Or you waited for this break of structure here and you went for a BSG squeeze on the first pullback you had there. These are where the locals will be doing business, right? These are where Mike will be trying to do a bit of business on a local floor trade. This is the commercial bidding at lower prices. They're not bidding at higher prices, are they? If the commercial's bidding at lower prices, what the hell are you joining them for? Preposterous. Crappy trading. You're not a commercial. You're not going to build a multi-billion-dollar position around the bottom edge. Wait for them to stop building at lower prices and wait for them to start building at higher prices. In other words, you'll see demand showing up there and you get a pullback from the demand and you go long at that stage and you're now laughing your head off. You've now got the trade on the books. And it's all in front of you there. There it is. There's that sell at 70 that we shouted. Now, I was confident that they would buy the 70 dip. I said that the 67 dip. I said that they'll start buying between 67 and 67.50. So you can see what happened today. The price traded down towards the 67. And obviously they traded back above that level 2 there, which was 67.40. That's why I was saying 67.50 to 67 evens, because obviously I've done my work on this. You might be saying, but why were you thinking about that as a possible buy trade? Why were you even contemplating the possibility of a buy trade coming into that as a narrative? Because I saw how strong the linkers were yesterday. If I look at the linkers yesterday, is there anybody that doesn't think that could be a buy trade into the bottom edge? Is there anybody that disagrees with that buy trade into the bottom edge based on the linkers itself coming into the trade? Preposterous, right? The dollar. With the dollar catching an offer, did anybody think that this was a buy trade into the bottom edge? Sure. But was there any supply? Was there any demand? It was all supply, wasn't it? It was all supply, which is exactly, interestingly enough, what I said in the tweet. I don't see any demand yet. Is that exactly what I said? I don't see any demand yet. So I need to see that demand. I need to see that demand showing up before I take the bit of business here. It must be a record 27 likes, guys. I don't quite understand why we managed to get 27 likes for oil. That doesn't make any sense to me. But anyway, 27 likes, Kevin. It's a record. And we didn't even quote Fibonacci. We never even quoted an Elliott wave number. Anyway, oil. Supply short, as tweeted, short at 70, ended up with a swing profit of $2,500. Macro dollar bears and a developing demand into the Brent Open will find me bidding 67.50, 67 evens. Note, the demand isn't yet visible, but I think it'll show up. Well, that's true from what you can see in that chart. You could have done exactly the same tweet for 27 likes, couldn't you? You could have done exactly the same tweet based on that storyline. I don't see the demand showing up. So I'm going to have to be patient for that drop into 67s. Well, that's good news because I'm already short anyway off the 70s. I'm already short on the open today. I'm already selling back above 68s this morning at the London session. So I'm thinking to myself, I've got between $500 and $1,000 of downside potential profit on this trade. So I sold again this morning into the London Open. And as we start to then drag ourselves down into the hourlies, you can start to see that we had this perfect top edge forming off that 68 print. So we had a beautiful low volume node coming through this area here. We started to see that top edge forming on this candle here. And all we were doing was working back into that short sell to retest back into that key price level. We were working back into the short sell on a micro chart. We're looking at the micro charts at this stage, guys. And obviously you can see in the overnight session, it was a case of working short sells into that 67, 67 wholesale price level. It's a great trade, isn't it? Does anybody see the trade though? Does anybody see the macro trade on this hour chart on the buy side reversal? Is that visible to everybody? Is that something you can all recognize? Can anybody spot it? It's obviously this candle here, isn't it? That's the candle that everybody's going to be looking at saying, wow, look at that red line going straight up. So you're starting to look into this candle coming into the US Open, aren't you? You're looking at this and saying to yourself, with the NYMEX Open coming up, I want to be busy on a potential long trade here, don't we? We take it off the hourlies. We go down into the 15 minutes. Does the trade start to show up on any particular candle? Yes, it does. It starts to show up on this candle, doesn't it? Starts to show up in that candle, and it starts to show up in this candle here. The divergence against the red line. The red line is now net going up. These candles are going down. We go down into a 5-minute chart. Does the trade show up anywhere? Does the trade show up on any particular candle? It shows up on this candle, and it shows up better on this candle here, doesn't it? The black line's made a lower low. The red line's making a higher low. So this candle looks even better. If we go down into the 2-minute chart, does it show up any better? Do we get any banker buy trade opportunities? The banker buy trade, remember, is going to be the black line dropping against the other lines. Well, really, obviously, the red line flattens here. So the trade is going to be on that candle. But obviously, we still get an opportunity to deal as the candle develops next to it here. And then we get a sweep candle next to it here as well at 1330. So I don't think we're losing a lot of value for the amount of upside potential. We drop it down to a 1-minute chart, and do we get the banker trade showing up on a 1-minute chart? Not really, not especially, but we're still now seeing very clearly how this storyline is evolving here. So we're starting to work down into this bottom edge. Now, they still manage to game you. They still manage to put you under that pressure and ask you the question, are you sure you want this buy trade? Because you're losing money. Are you sure you want to buy it? And obviously the buy breakaway from that trade was relatively good. It went from $67.20 to $68 again for another $800 profit coming into the NYMEX Open, of course. And from the NYMEX Open, we're starting to see that supply idea developing back into the top lines. There's no individual candles that have that supply. You can see that for yourself. But on a relative value basis, you can see what started to happen here. You started to see that red line flattening, and you can see the black line going higher. So that's starting to become a short sell. You've obviously got that low volume node, which is there, which means a high volume candle. Did we get a high volume candle? Yeah, it's the highest volume we've had for a wee while. So there's an opportunity maybe to get that short sell working into that trade, isn't it? There's an opportunity to trade that high volume, low volume node. High volume candle, low volume node, short. And obviously it did peel away from that trade. Now, obviously, from the linkers point of view, we want to try and get a view of whether the linkers were in favor of the short sell. Yeah, marginal. Were the linkers in favor of the buy trade, yes or no? Were the linkers all over this as a buy trade? Yeah, very much so, right? So with the linkers very definitely in favor of the buy trade and everything else stacking up for that as an opportunity, well, you just execute, don't you? You just go ahead and get the deal done. And obviously, as the trade traded up into the high, it's not exactly spectacular. I don't have the short, by the way, guys. It's just obviously we've just been working through it as an exercise. I did have the buy trade, and I've been exiting into this top line, which is a low volume node. So I've been exiting my positions into these candles. So this candle here, I exited it there, and I exited into this low volume node top edge. You can see it's a low volume node because there's the low volume node there. See these low volume nodes that break the RGLs together? So there's my low volume node, and that's going to be a high volume candle. So I'm going to exit into that price area. Did I have value to short sell it? I don't think I did. We're obviously just discussing it from a different perspective here. So I'm not short the market at this stage. Will I get short the market? Well, I'm starting to think that this could be a trade that I might start paying attention to, right? I might start paying a little bit of attention to this bad boy now developing in the background. So yeah, maybe he's eyes, maybe he's nose, but let's see what happens. So I'm starting to think that I might want a bit of business on this. Anyway, there we have it. Oil from the weeklies to the 1 minutes. Great way to make a living, guys. Great way to make a living.